Hi, my name's Ruben Mann, and today we're going to be talking about S-Corp taxation. So this conversation is sort of a broad, general overview. There are certain states where S-Corp taxation doesn't make sense, and there's also other states where real estate commission rules require some additional steps in order to utilize an S-Corp. So if you have specific questions, talk to a tax preparer in your state, or you can talk to us at Tax In-House, and we will give you specifics on your state. But in general, this is how S-Corp taxation works and why it makes sense. So when you're taxed as a sole proprietor, how the vast majority of real estate agents are taxed, meaning you file your income and expenses from your business on your personal tax return, the entire amount of profit generated by your business is subject to self-employment tax. Now, self-employment tax is 15.3% up to the Social Security base, and it's 2.9% thereafter. Now, that can represent a massive amount of money. You know, on $100,000 in profit, we're talking about $15,300 in self-employment tax. Now, if you're instead taxed as an S-Corp is considered a flow-through entity, meaning you still owe taxes personally. The business doesn't owe the taxes, but how the income and sort of taxes that you're going to owe is calculated is slightly different. So with an S-Corp, the first thing that's going on is you're going to be filing a separate tax return for your business. And the second major component is you become an employee of your business and you need to claim a reasonable salary. Now, we get a lot of questions about reasonable salary, and frankly, if you ask 100 tax preparers what a reasonable salary is, you're probably going to get 100 different answers. The bottom line is there's no bright line rule saying this is what a reasonable salary is. It's a factors test, and it's one that frankly is interpreted by courts. But basically, they're going to be looking at the industry you're in, how long you've been doing what you've been doing, your specific role, what you're paying employees, and sort of getting a broad overview of what's going on in your business and what's reasonable. So in real estate, where the average realtor made something like $25,000 last year, you're able to claim a lower reasonable salary than some other industries might claim, and as you'll see, that's to your benefit. So let me give you an example. If you were a Schedule C business and you had $125,000 in GCI and $25,000 in expenses, you will have $100,000 in profit, and you're going to pay, as I said earlier, $15,300 in self-employment tax. Now, that same business were taxed as an S-Corp, the income and expenses are exactly the same. However, you have to claim this reasonable salary. Now again, because this is a hypothetical, I'm going to use the number 50,000. Whether that's right or wrong is going to vary on your specific circumstances. But if this business now claims a salary of 50,000, the business itself shows profit of 50,000. The 100,000 we had originally minus the 50,000 in wages equals 50,000. And both the $50,000 W-2, the wages, and the $50,000 K-1 profit get reported on the individual agent's personal tax return. So we're showing the same $100,000 that we were as a Schedule C, it's just being reported in a different way. Now here's where the tax savings comes in. Wages are subject to payroll taxes. Payroll taxes, it's 7.65% paid by the employee, and the employer has to match that 7.65%. Lo and behold, you add those two together and you get 15.3%, the same as the self-employment tax. Basically, the IRS is saying when you're self-employed, you're the employer and the employee, so you need to pay both shares of the payroll tax. However, as an S-Corp, you're only paying payroll tax on the wages. So in our example of $50,000, you're paying combined $7,650 in payroll taxes, significantly less than the $15,300 you are paying as a sole proprietor. Now the other $50,000 that's coming to you on a K-1 is considered passive income and is not subject to those same payroll or self-employment taxes. Now your income tax isn't going to change because in both scenarios you're still claiming or showing $100,000 in profit. So that's sort of a very general overview of why it makes sense to be taxed as an S-Corp. It can be dramatic savings if you're going to be a successful real estate agent. And frankly, if you're watching this video, I'm going to assume you are being a successful real estate agent. It's going to make sense. And the only sort of variance is those states that have state-specific rules that mitigate that to a certain degree. Anyway, if we can answer any specific questions for you here at Tax In-House, feel free to contact us. Hope you're having a great day, and get out there and lead generate. Take care.